Welcome to the Seed World Pro podcast, where seed industry professionals get the knowledge, tools, and peer support they need to grow their businesses and careers. I'm your host, Michelle Pager.
Welcome back. I'm excited to be continuing our Seed World Pro Power Talks. Today, Brady Brewer is going to share with us not only why it's important to think like a CFO or Chief Financial Officer, but how you can begin to get in that mindset. My goal is that you find this information fun, valuable to your business, and inspiring, that you can take this and use to make your leadership skills a bit stronger. While we're all asked to stay within a budget, we oftentimes don't think about the financials, and we want to leave that to accountants. But there are a lot of things that can help take shape if we put ourselves in the mindset of a chief financial officer. So no matter what position you're in. So this is what we're going to be digging into today. But first, I want to quickly introduce Brady. Brady joined Purdue in 2018 and also serves as a key member for the Center for Food and Agricultural Business. His research focuses on ag finance and production topics, including profitability, which is hard to come by these days. Also credit availability, production efficiency, and credit choices for farmers and farmland values. So you have no shortage of challenges and complications that you've been dealing with the last few years.
Been an interesting time.
Sure. But agribusiness is such a key piece of that puzzle. And so that's what we're really focusing on today, is more of the agribusiness side of things. And you have a unique perspective because you see both sides of the coin here. Prior to joining Purdue, you were at the University of Georgia, correct?
Yep. I was there for about 2.5 years.
Fantastic. And you're originally from Oklahoma.
Yeah, I grew up on a farm, so a little bit different than where I am currently here in Indiana, but grew up on a farm that, mainly did wheat, alfalfa, and then a cow-calf herd. So, and especially, you mentioned Georgia as well, seen a few different types of agriculture across the country. So it's always interesting when you move to a new place to see the crop rotations and the farming practices.
Fantastic. Well, let's go ahead and dig in, and we'll just start with, why is this topic important?
Well, so I've seen every side of this. So what I always tell people is that my undergrad degree was in accounting, and I thought I wanted to be an accountant. And my first job out of college was I went to a major, Fortune 500 firm, was in the accounting department, cash flow. It was great. I was pushing spreadsheets every day. But what I quickly realized was that I wanted to be the person that was analyzing what I was doing, because, in some regards, I was creating all of these reports and these ledgers and, the balance sheets and income statements for this company. And I was doing them so, another person, namely, the CFO and the people that were making the financial decisions could make educated decisions about where the company was headed. And I think that this is true for a lot of companies, and it doesn't matter what role, whether you're an accountant or salespeople, we're asked to input these numbers, and a lot of times we don't really know, it's a black box, right? We don't know what it's being used for, where it's going. And really the CFO of the business, that's their job, is to be the forward-looking arm of the business. I tend to say that the role of a CFO is to steer a car while looking out the back window, because all of the accounting stuff that we're inputting is all backward looking information. It's all happened in the past. We got to use that information and then try to make educated guesses and informed decisions as possible with the reports that we design and make, to make the best forward looking decisions, to form the strategy and get our company moving in the right direction. So, in my mind, the CFO is where the strategy formulation for the business really starts, because it's where you meet the pavement and start forming the plan that gets the CEO eventually approves.
So I was going to say, who is the CFO working with? Who's their core team that they're relying on and bouncing ideas off of? But, you mentioned of driving forward and looking backwards. And I think that's a really good analogy here.
Yeah, I mean, so really the CFO, in the ideal sense, should be working with everyone. The CEO is relying on them to be their business partner, to line up their strategic goals that they're thinking about, and to provide that roadmap for the company. But, other management, other players, in the management space of a company, they're looking to the CFO to provide that financial analysis support, to help them make the decisions at the lower levels of the business. And then obviously other employees, any employee of the business should have some hand in the CFO, and the CFO should be providing a management leadership back to them. And hopefully the reports that you're making can be used by everyone of the business, not just the top management as well. And then obviously anyone that's a stakeholder, whether it be an investor or, employees are stakeholders as well. They're a partner with the CFO. The CFO is there to make sure that everything is running smoothly, that the strategy laid out is working. And if I'm an investor of a company, I look to the CFO to provide that guidance as well.
Mm-hmm.
So, there's obviously pitfalls along the way. A CFO never, I give the driving a car looking out the back window analogy. That's, one of the major pitfalls is if the past, maybe you tried something that didn't work, it can kind of skew your vision for the forward looking. Sometimes we say, okay, the reports are coming in, the income statements are red, it's not making money, we need to go a different direction. But this is where a CFO's role becomes really tricky, because you're marrying the financials with the strategy of a business. So you have to maybe sit down and say, okay, why didn't this work? Okay, the backward looking, the view out the rear view mirror of the car says, okay, we need to go a different direction, but maybe we need to stay course for a little bit longer. Or maybe it's the opposite. Maybe you're in the black, your company's making money, but your forward projection is that the market is moving a different way. So even though the rearview mirror is saying everything's fine, we need to change course. So that's the hard part about the CFO. It's where the strategy piece and the financial piece come together, and it's not always a pretty picture that you paint. Sometimes, pieces are missing, and you have to use intuition to fill in what's missing from that picture.
Mm-hmm. Now, for the person who might be in, say, a sales and marketing role, or somebody who's in inventory management, or, managing a communications department within a company, why should they care about this, and what can they do to contribute to the business in this fashion?
Well, this is something that when we do trainings here in the center, something that we get asked a lot of times. If you're a salesperson, you're down in the weeds of the business, right? Like, what you care about is, I have a sales goal of selling X amount of seed or whatever product your company is selling. And sometimes it's very hard to get out of that bubble of where your job lies within the company. But I always say it's important to understand the decisions you make affect everything that the CFO is looking at. So the analogy I'll give here is, let's say you have a sales goal. Maybe you've met it, maybe you haven't. But you have to think about what the CFO is looking at. Okay, so let's say you're trying to sell more product. The CFO, okay, so you have the sales goal, you need to sell more product. What the CFO is caring about is, okay, you sold more product, but at what cost? Okay, they're looking at the broader overall implications of your decisions. Okay, yes, you may have pushed that product, but maybe you lowered the price to get that product out the door. What is that going to do to overall profitability? What is that doing to our asset turnover or our profit margins of the overall business? Yes, it's great that you sold it, but if we did it at a loss, or we did it at a margin that maybe we don't think is sufficient enough, to justify the costs associated with those transactions, then maybe it's not helpful or improving the overall financial health of the business. So, why I use that analogy is just to bring up is that sometimes we can be very short-sighted in our decisions. We don't think about the other side of the coin. Yes, we increased revenue, but how much did costs increase to make those transactions happen? Okay, that's why I always encourage people to think at a broader level. Think like the CFO, because you have to think about both sides of the coin. It's easy to get in our bubble, and it's hard to get out of it.
Yeah, that is definitely true. Sometimes, yeah, we get in our silos or down in the weeds, and it can sometimes be hard to step back. And so, do you have any strategies for how do you step out of the weeds? How do you bring yourself to say, I need to put this aside and think about that bigger picture in planning my own year for that?
Well, I think part of it probably starts when you're setting goals of, for your business cycle, to write in some of those broader implications, not just put in a sales goal, but also put in, okay, what is the margins that we're trying to get as well? That way we don't lose sight of those. I also think it's important that employees understand the financial aspect of the firm, whether it's training on the income statement and balance sheet or other type of financial management training. Whether it be the profitability linkage or the DuPont model, understanding the profits, the efficiency, the turns, and then the financial position, the leverage of a business, understanding those financial concepts, because then it starts to become second nature to understand, maybe not second guess is the correct terminology, but critically think about, okay, if this is what I'm going for, these are the implications on the income statement that the CFO is going to be caring about, and that can help guide some decisions. And a lot of times, there could be people watching this to say, okay, well, selling more product is never a bad thing, right? Most of the time, yes. There's probably very few instances that a CFO would say, sell less product, right? Whether you're, maybe if you're selling at a loss or the margins just don't justify it, but it's those few instances that can really, be detrimental to a company that a salesperson may want to take a step back and think about those broader implications. So I always advise financial training. And, as someone who teaches finance to 18 to 22-year-olds on a daily basis, I understand it. It's not the most exciting topic ever. Most of the time when I say it's time to learn about an income statement, and while that excites me, because, I'll be honest, I'm a self-proclaimed nerd. Most of the time people's eyes glaze over and they're like, oh, the income statement. I understand it's not the most exciting topic, but it is so vital to, to understand the implications of everyday business decisions and why companies should focus on it.
So previously we talked about 5 key financial performance areas. What are those, and kind of help us grasp, what we can do to put those to work in our own departments?
So typically CFOs, in my mind, tend to compartmentalize financial performance into those 5 areas that you mentioned. So, the first is profitability. This is looking at revenues minus expenses. Did what it costs us to make that product and sell it and get it out the door, did it return enough value to justify it? And obviously there's different measures that we can get into, whether it be profit margins or expense ratios, or there's 1,000 different ratios we go over to analyze that. But that's what the CFO is concerned about. The 30,000-foot view there is did we create enough value with the product that our end clientele purchase it at a high enough price to justify us selling that product. The second one, capital structure and growth. This is getting into more the long-term vision of the firm. What is our asset structure? How much equity do we have in the business? How is the debt that finances our company, how is it structured? Is it going to be detrimental to the risk of our business? Or Are we returning enough return for those investors in our company? Third, size and growth, thinking about, okay, this is where we are today, but now we're starting to bring in some of those strategy aspects of the firm. What's our growth prospects for our company? You know, all company, the goal is to get bigger, right? You know, we want to increase market share. We want to increase our service footprint, and how is that structured in the financials? Risk and financial documentation. Obviously, risk plays a big goal of that. I already touched, you know, this goes hand in hand with the capital structure and debt service. You know, are we over leveraged? Have we overextended ourselves with the debt that we've taken on, whether it be bonds or loans or stock investments? And what's that costing us? How is the financial documentation piece? You know, this is probably what a lot of accountants, you know, most people think that accountants' lives are to serve tax, you know, the IRS and Uncle Sam in tax reporting. But when you think about the role of a CFO, it's actually a pretty small part, but it does go in there, thinking about, you know, we have to satisfy those reporting standards that our investors and the government require. And the last one is creating shareholder value, whether it be, you know, economic value add, or just the return that our stockholders, our investors are requiring, you know, making sure that they're happy with what we're returning them. Mm-hmm. But also making sure that, you know, and this is why, you know, I mentioned why it's important for a salesperson to think about the role of a CFO and the profit margins. Yes, you sold that product at a profit, but is it enough that's going to satisfy our shareholders, right? Because at the end of the day, that investor chose to put their hard-earned dollars into our company, and we have to be cognizant that they require return on that, and we have to make sure that, you know, we're keeping them happy. Not only them, but also our debtors as well, if we have loans or bondholders. Mm-hmm. So those are kind of the 5 broad areas. Obviously, there's overlap between there. Risk also goes into capital structure, but if you break those down into the 5 major buckets, those are the 5 major, you know, if what a CFO thinks about on a daily basis, those are the 5 main things.
I think that's great to understand. The one question I have, or the one thing that kind of stands out to me as I sit and I listen, is that from a company standpoint, and when you are in the weeds, you know, sometimes there's a disconnect between upper management and middle management, or some of that doesn't all percolate down, maybe is the best way to say that. And so do you have any advice for, you know, helping CFOs to share that information, or for somebody to go to a CFO and say, can you share this with me? You know, I've been learning about it, or I want to take an interest in how can I better contribute to the larger vision of the company?
Well, so I think a large part there is the communication and the verbiage. You know, I always joke that half of finance is understanding the semantics. I think the world of finance has 5 terms for one thing, you know, so if you're talking with a CFO, they could be throwing out all this jargon and stuff that can confuse people. And that's why it's important to get the financial training for employees to understand maybe what the CFO is saying. But on the flip side, it's also important for the CFO and financial aspect of a firm, or the financial arm of a firm, to maybe translate some of that out of the financial jargon into the words and jargon that the other people of the business use as well. So it goes both ways. You know, and that's, you know, it's difficult for a lot of people. I've heard employees say, well, you know, that doesn't mean anything to me. And, you know, and when I went to the CFO, I thought I had this great idea, but they asked me this question. I didn't really know what they meant, and they ended up not approving it, you know, because exactly. So, you know, it's not that it wasn't a great idea. There was just a mismatch of communication. And, you know, because the CFO may think in terms of return on investment or net present value or something like that. And if you don't say it in the terms that they think, they may just disregard it, because it's like, well, this, you know, if I don't know that, you know, I'm not going to approve this project if I don't have that piece of information. Until I have it, it's going to be a no-go. You know, so it goes both ways. CFOs putting it into different, or the financial arm putting it into different terms so the salespeople and other arms of the business can understand, but it's also the financial training for the salespeople, so that when they do have a good idea, they can convey it how the CFO thinks about it, so it can maximize the probability that the CFO understands it and then thus approves it.
It's kind of like if that doesn't happen, two ships crossing in the night and they're not able to connect and make that exchange or that handoff.
Yes, I've seen instances where when you talk to the salesperson, you talk to the CFO, they're essentially saying the same thing, but they don't understand each other. So
I was
and
going to
it's
ask
frustrating.
if you had any stories or any examples of, a situation where maybe you've seen go wrong, or, somebody, or, an example where it's gone incredibly well and something phenomenal has happened.
So on the wrong side, I think just seeing someone try to articulate, maybe, so in this particular instance, it was trying to articulate a particular investment that the company should have been investing in. And again, we get in our bubble, the salespeople were thinking about, well, how much does this improve sales? Um, and and it was actually a really, really great investment. But they forgot about the cost side. And in reality, the investment that they were making would have decreased costs as well. So, I mean, in my mind, it was a win-win. But, since they hadn't thought about that, they hadn't thought that, oh, when we go to pitch this to the financial team and the people that will be approving it, they're going to not just care about how it impacts our role, but how it impacts decreases the cost and improves other people, around us as well. The broader implications. I think if they would have just thought through that, and then the answer would have been it 100% benefits everyone. They just hadn't thought through it. So it was hard for the CFO to wrap their head around, around the approval for that, because they didn't have that information, right? So that just because they were thinking more broadly.
So I think that's a really good point, or kind of maybe a tangent to head in or to attack is, if you are making a pitch, or you're bringing a new idea to the table that you want the company to consider in terms of moving forward on, what are some of those things that you need to be considered, or that you need to be prepared to answer during that pitch?
Well, so the obvious ones are the revenues and the costs, right? I think you also need to think about not just how it affects maybe the core unit of whatever you're proposing. So if you're proposing an investment, whatever arm of the company the investment is for, but think about the broader implications. But I would also, just because, one of the roles of the CFO is thinking about the risks, we can make projections to say, hey, this is what this particular investment's going to do to sales or costs or something, but the risk associated with that, what is the probability that this may not work out, and what's the plan for it if it doesn't? Can we sell the asset off at a slight loss, or is this a big risk to the company? If we purchase this asset, are we stuck with it? Is this now just a sunk cost that we can't get rid of? Those type of things. And even if it is a big risk, to be upfront with the CFO to say, hey, we know it's a big risk, but there's a lot of potential here. Just honestly thinking about those 5 buckets of the CFO: profitability, the revenues, cost, the risk, the capital structure. Are we going to have to take on a lot of debt to do this project? What's that do to the leverage and our relationship with our debtors and our stockholders? What's that do to the value we create for the stockholders, right? So at the end of the day, we can say, hey, we're creating more value for you by doing this project. I personally, I would think broadly about those 5 buckets. That's going to make your CFO really happy if you're giving them a pitch, because that's their job, and if you do the work for them, that's just going to make your case all the much better.
We touched upon the what can go wrong, but what are some pitfalls that people fall into?
So just because the CFO is relying on backward looking data, right? We're using those accounting documents to do a lot of the analysis, or in situations I just described of doing an investment analysis, we're relying on past data to try to project future profitability. You can always be too stuck in the past. Markets change. It's the example I like to use here is that when Amazon first got started, um, when Bezos went to his investors, he told them this is going to take a while to become profitable. And Amazon didn't turn a profit, I think, for 5 or 6 years. Which is quite remarkable in today's society because investors typically require a return pretty quickly. So, that just tells, the compelling argument he made. But he essentially went to them and said, look, the way we do business is going to change in the future because the internet is going to change it. Ratios, there had been some companies try some online stuff. It hadn't worked out. You have to forget what has happened in the past because we're going to change that. You have to trust in the strategy. So I definitely think one pitfall is being too stuck in the past. You definitely have to marry it with the strategy piece and be the forward looking of the market analysis, the marketing side of the business has to be taken into account as well. I think the communication aspect as well. We mentioned just the jargon aspect between the CFO and other levels of the business is big. CFOs have to come down from the finance laden jargon to communicate. And then, the other side has to maybe beef up a little bit on the finance jargon. Time commitments as well. That's a huge consideration with the cost side of this. Not just the cost of the project, but the cost of reporting, the cost of the financial aspects. How many accountants do we need to figure out if this thing is going to be profitable? Accounting and finance in the realm of management, if you think of management in terms of planning, organizing, controlling, directing, finance falls in the controlling arm, making sure essentially we formed a strategy, we've organized our company to go execute it. Controlling is the aspect of management of, okay, now let's actually see if we're making a profit. We can't get too bogged down with how much time it takes to ensure that, right? Mm-hmm. We have to make sure that we're being cognizant of everyone's time. We can tell someone, hey, we need all these reports, but if the cost to create those is too much compared to the value they're creating, maybe we're better off without that report. Maybe we can just rely on intuition, right? We can guesstimate that number the best it can, to the best of our abilities. And it'd be a lot cheaper and not take a whole accounting department to create it. From the employee standpoint, I would say probably one of the pitfalls of the CFO realm, again, is on that time aspect. And this is where the training aspect comes in as well. You tell a employee to go do a report, they're trusting you that this report is getting used. Okay, so not only does that report cost too much, but we also got to make sure that what we're telling our employees to do on the financial side is actually getting used. And that was one of, I said I started out in accounting before, I'm doing the profession that I'm doing now. That was something that bothered me, is that there was this black box. I would ship reports off via email, and I just kind of trusted, are people using these, right? I'm a very deep thinker in that regard. So maybe there's some people out there that say, okay, I'll do reports every day and get paid for it and not really care if they're getting used. But I wanted to make sure that what I was doing, what I was creating, was actually impacting the business. So we have to be pretty cognizant of people's times, not just the cost aspect, but actually making sure that, hey, maybe there's something else we could be doing better with their time as well. There's other reports they could be doing that impact the company, have a broader impact.
Mm-hmm. It seems to me that half the battle is being able to articulate it on both sides, as being able to articulate the current scenario, the roadmap, but then on the flip side is to articulate what your vision is in terms of what are you trying to pitch, or what are you within your department trying to accomplish, and then how do you marry those two things so that they can both go forward.
Yeah, it's telling that story. I mean, are you a big fan of the show Shark Tank?
I do like that.
So as a finance person, I always find myself uh, wanting to jump at the TV and say, but what about the financials? What do the financials say about this? These are big time investors pouring lots of money into essentially a story.
Yeah.
And I think your point just states, it's the communication and story that that ultimately wins, right? As much as my accounting and financial background says, no, it shouldn't be. That's why we also have that forward-looking aspect duty of the CFO. That story of what is the market doing? What are consumer demand doing? What's the marketing aspect of our business doing? We can't forget about that, and that's why that CFO role is so important. It's where that Shark Tank, the story that tugs at our heartstrings, that says yes, people are going to want this product in the future, and that this is a worthwhile investment, gets married with, but this is also what the data says.
So also to play off of what you just said is when you're coming with that pitch is to understand the market dynamics and to be able to paint the picture for the CFO as to maybe if there's a blind spot or something that they might not see because they're not out in the field or they're not intimate with, what's happening at that level.
Yep.
So
no, that is precisely the case. I mean, those, and I'm sure that the investors on Shark Tank have a little bit more financials. They probably don't show those on TV because it would bore the audience, just like my classes when I teach finance. I'm sure they probably have a little bit more than they let on TV. But the point remains is that a lot of those decisions are based off the marketing aspect, and then the financials become secondary. So it's that story, it's the communication aspect. Those startup, the people that go on that show are very good at telling the story of their product and why people will want to purchase it. We as employees have to be very cognizant that the story we tell also matters to our CFOs and CEOs. How we tell it in the grand scheme of things matters.
Mm-hmm. So by putting yourself in the CFO seat, you're pulling yourself out of the weeds. You're able to grasp the larger roadmap of where the company is going and kind of the destination for the future, and align your own department strategy with how you can get there. And that helps you to be successful in the work that you're doing, but also in supporting the company's goals.
Precisely. Couldn't have said it better myself.
So, well, with that, Brady, I want to say thank you so much for joining us today. I really appreciate it. To our viewers, we hope that you have found this information to be valuable, to be inspiring, and that it's something that you can put to use no matter what role you're serving in today. So thanks again for joining us on Pro, and we hope you have a fantastic day.